Hey, everybody, welcome back. Minor Ramos here with Matters of Eternity. And you already know Francine um, uh,
Galileo
Walters,
Walters. Yes.
Walters Asset Protection. So we're really excited because there's a lot of conversation out there right now about what's going on with the banking system. So let's go and figure this out back to 2008. So uh I maybe you could tell everybody what you were doing then, but I was working for a large bank, HSBC, and I'm telling you, things were going great. I had gotten a couple promotions, had gotten my master's degree. We're on a roll to get a bigger assignment, maybe leading a team somewhere like in Asia or Europe or something like that. And then boom, right? 2008
Right.
comes along and it hits us, right? Like bam, like it just came out of nowhere. And what happened out of that was the biggest banking crisis we had ever seen. Everybody remembers the 2008 fallout. So, Francine, what were you doing in 2008 around that time? I know it's painful
Oh,
sometimes to think about it.
2008 was great. I was a teacher in an elementary school. I was
Okay.
having a blast. I absolutely loved teaching. My late husband was in sales. Business was booming for him. He did the electronic medical records. And me being a teacher, I was good, right? My late husband being in sales, we were okay. So really, we saw it all collapsing around us. Now, we were nervous about our mortgage, and all of those things. But other than like financially, we were good. And I know people that were in different industries really struggled at that time. I know. Tell me about it, Minor.
Yeah, I mean, anybody that was in mortgages, real
Yeah.
estate, and really any of the financial sectors, the banking, sector. So it was scary times for sure. Now most of the times when I talk about this, people are like, everybody's like kind of along with me, but you're probably an exception to that, which is,
Yes.
it's a testament to just knowing what area, what part of business you're in and all that other stuff. So that is actually a relief most of the time. So everybody has been in it and walked it through it with us. So we're going to be talking about a few concepts on the banking side, but what happened during this time is that the banks were too big to fail, right?
Right.
So there was no way they were going to let them crumble because it would bring the economy down. So
Right.
what happened? The bank they were the bailouts. That's really what
Right.
was going on. That's the topic of the time. And there were so many banks that went out of business, but the ones that remained, the bigger ones, got some pretty good size money. And what happened? Do you remember what was going on?
Well, yes. So that was when bailouts were a thing. Now, there was actually legislation enacted in 1995, Regulation D, actually said that there would be no more bailouts and there would only be bail-ins.
So
And a
wait a
lot of
minute,
people don't know what's that.
Reg D goes back to
Oh,
95.
yes, 1995.
I
And
thought
and
Dodd-Frank of 2008 made it no more bailout. So go on, tell us now. You
yes,
now you got
so
us going here.
yes, so Regulation D was stating no more bailouts, only bail-ins. And a lot of people hear the word bail-ins, but they don't, or the words bail-ins, but they don't know what it means. So what it means is that when you put your money in the bank legally, it's um you're loaning it all to the bank, right? Well, at that time, we had the fractional Federal Reserve banking system where a portion of it has to be held in reserves back then, right? So it was 10% at that time. And so, they would have to hold, like if you have $100, they'd have to hold $10 in reserves. And then when people go withdraw money, they pull all the reserves together and they give people the money, right? So, and that comes back a little bit later. We'll talk about that in a little bit later. So Regulation D, you put your money in the bank, they sweep it into another account with their name on it. Now they use it as collateral
Mhm.
for investments they make.
Yeah.
So if they make really bad investments,
Wow.
what can happen is your money can just kind of evaporate, but they have to give you something in exchange. So typically what they'll give you is shares in their failing bank.
Mm.
And so who wants that, right? But most people don't realize that. You know, you get like a million emails from your bank saying updated terms and conditions. And who reads those? I don't.
Yeah. They
Who
just
has
click,
time?
right?
Yes, exactly. And so a lot of people don't know that that's actually there. It's been in place. But when things happen like 2008, the government says, oh, we don't want that out there, right? We can't allow everybody's money to evaporate. Let's step in. So that legislation is there and in place.
Yeah. Now
Yeah.
we will do another video when we're going to dive a little bit deeper into the bail-in, but right now,
Okay.
yeah, I wanted to really zero in because you know most people have very very short memories. So I mean,
Right.
we talk about this all the time, but like all of a sudden, like they forget, that this actually happened, and for some people, it's still very fresh. It's
Yes.
still like we don't want to repeat of all of that, and we'll do another video because this gets really interesting. 2008, 2009 is when we saw the kind of like the opening of cryptocurrency, right?
Right.
Like and the thought behind it. And now we're gonna talk about B, central bank
CBDC,
decentralized. Yes. So we'll talk about that
central
in
banking
another one.
digital
Yeah.
currency. Yes.
So, all right. So I think in general, we're saying there was legislation about bailouts, and 2008 comes along, and yet they still bail them out, right?
They did.
All right. Well, no surprise. I think what's happening now, and as we go through the next videos, we'll just kind of like break it out a little bit more into what was going on there. But any final thoughts on bailouts? Let's go with bailouts for now. Any final
Okay.
thoughts?
So it's important that you understand legislation. It's important that you understand what happens with your money if it's in a bank that's making bad investments. And you have to remember that, yeah, so you have to remember that this is all banks and credit unions. And we'll get more into that later
Yeah.
because some people think my money's safer in a small local bank or a credit union, but the legislation applies to them all. So
Okay.
people need to know that.
Right. All right. So stay tuned, guys. We're gonna come back and do some more videos because you guys have been asking us what in the heck is going on with my money.
Yes.
Let's stay tuned and come back and watch us again.